Okay, I'm starting
So,
the stream.
Hey guys.
And is it Chris?
hey, Steve.
Cool. I think we should come on soon. Is it me or is my window a different shape than it normally is?
It was. I think it only does that when you're on center, but the minute you'll switch with one of us, I think we'll assume your position, and then I think that's what it does.
Okay,
Um,
cool. Awesome. Um, I feel like the three of us must be somewhat richer than before. Satiris, I'll check in with you because I know you're a bit more of an active trader than a long-term hodler. How's the week been?
Not too bad. Nice to see. Nice to see a sort of new Bitcoin all-time high in a fairly sort of resounding move. So it's not just kind of a wick and then back down. It seems like we've kind of hit 25, and obviously it might retrace, but it's sort of a fairly good movement, especially given the sort of very bearish sentiment leading up to it. So I think it caught quite a lot of people off guard, myself included. And so nice to kind of see that play out. I think it's sort of added a bit more froth back into the markets.
We like the thrust.
Yeah, but still, I think people are still kind of hesitant. So we haven't seen sort of like full mania hit just yet. But I think now is potentially a good time to sort of reallocate some funds if you had any dry powder and stuff. But I think probably still worth to be a little bit cautious. So I think this week we can maybe start with talking about some of the stuff we've been kind of looking at or investing in, trading. So for me, been like looking at like hot narratives. So Asta launched. I managed to catch some of that, which was quite nice.
Yeah.
XPL as well, so Plasma, caught a bit of that. Kicking myself, I didn't allocate to the ICO. I was like fucking traveling and just missed it, but that was a sort of 20x for ICO participants, and so I think nice to kind of see a little bit more of that coming back to the market. It did make for, I think, quite a lot of overhang, and so we saw the price like pull back quite a lot, and then it's been consolidating quite nicely. Let's put up some charts as well, maybe.
Yeah. And also, like, while you're on the topic, like, do you have a long-term view on, the Aster and the XPL? Because I'm like, whenever you see something perform so well, you can't help but be a bit cynical and be like, is this like a new hyperliquid? And it's not too late to jump on the bandwagon because this thing is going to the moon for a very long time. Or, the gains are made, pull back, wait for a bit, see if there's actual substance in it. And I have no idea. So I think you're the expert on that front.
Yeah, I far from an expert with any of this, but I think sentiment-wise, I can definitely feel a shift to sort of BNB ecosystem at the moment. So especially with CZ sort of being more active on X again, I think that really helped kind of fuel the Asta narrative. When Asta sort of got picked up by CZ, I think that put in sort of the top for hype. So I do think it is sort of like nipping at the heels now of Hyperliquid. They are quite different tokens though, and so Hyperliquid has the EV, like the EVM L1 play that's fueled with the hype token. They're still by far got the largest like OI of on-chain perp dexes, which I think is a lot more telling than a lot of this like wash traded volume that you see on like Asta and Lighter. However, Asta's new, it's like something backed by CZ who probably wants to see it succeed and sort of take a bit of Hyperliquid's market share. And so I wouldn't be surprised if we see sort of a bit more continued support of it. It'd be interesting to get your takes on how it was a token as well. Did you guys see much buzz around Aster or other BNB ecosystem plays? And just one final thing on the BNB thing, I've also been buying some Cake. I think Pancake Swap could do well, and it's just sort of coming out a fairly long consolidation period. Let me screen share quickly.
Yeah, I was going to say, like, show the charts. We want to see.
It's a bit more interesting than me just.
But it is super smart. And just before you show the thing, it's like, I feel like, Tom, a long time ago, you were like, if you're betting on a bull market, you should be buying exchange tokens. And I was thinking about CRO, and I didn't pull the trigger. And then I saw the performance, and it was absolutely massive and totally a missed opportunity. So maybe Cake will be my or our redemption story somehow.
Maybe. So I quite like this sort of chart pattern in general, where you're seeing you've got this like fairly good support resistant line. So it's kind of bounced along here. It's kind of retested a few times. Arguably, you could draw the line up here as well. Yeah. But either way, we're sort of coming up to an interesting point. Yeah. Maybe it goes back down above, or it just shits the bed. But either way, I think I was buying sort of around low threes initially. I think still has a little bit of upside to go there. And just on the XLP graph as well, I think as far as like telegraph bottoms go, I think this sort of rounding pattern is quite nice for a lot of stuff I like to bid. Who knows if it'll hold up and continue higher or it just retraces, but I think this feels quite solid. And one final thing on XLP as well is I think a lot of the big allocation wallets have now sold as well. So a friend shared an image with me. It's not loading. That shows basically the allocation of the XLP whale wallets, and most of them have sold their allocation. Because like some guys got like 32 million XLP token airdrop for allocating stables to the pools, and so it was quite a lot of sell pressure to go through. But the team are saying they've not sold any of their allocation yet, so I guess it's mostly just the airdrop sellers.
Yeah, do we have any info on the vesting as well? Because typically that's sort of really, really telling. I mean, obviously the team has executed really well. I think they got $5 billion of TVL and at launch, which is something super significant, obviously. So they've executed really, really well.
I mean, the market cap to FDV is 0.18. So that's a lot of supply that still needs to be digested, but then it depends also when that's actually happening.
Yeah, so I think they've also got a lot of like lockups released. I think the team vesting is moderately long runway. I remember the founder coming out sort of trying to fight against some FUD. But without getting too much in the weeds, I think these are some new tokens I've been paying attention to. Cake for the sort of narrative, if like BNB ecosystem continues to do well. BNB is at all-time highs as well, so that's showing a lot of strength, especially compared to some of the other larger caps. And then a couple of other things. I think ENA, especially if XLP does well, I think that could go with the stablecoin narrative. And then one other one I'm looking at is Pump. I think we're seeing a bit of consolidation and retesting of a bit of support. So I've had a bid here. Who knows if it'll work or not? But yeah, that's kind of what I'm looking at. Oh, and Filecoin as well.
Obviously, always.
Yeah. So sorry. I know I jumped all over the place, but with Token, would love to hear how that went for you guys, what you're hearing on the ground, anything you're excited about from that, any whispers of Aster.
I think in terms of alpha, like when people do talk about degen stuff going on, there's definitely a mention of Aster and also XPL. So the two names you're talking about are the names that are being talked about. So I think you're on the right path and potentially a trendsetter in that respect. But I haven't heard any. I didn't. Thomas, tell me if you heard anything differently. But in my conversations, I thought Token 2049 as like a conference was one of the best ones I've been in for a long time, actually. But for other reasons, like just more on the personal and professional side of things. But in terms of alpha and like people degenning, I haven't heard much. And I still don't feel like people are that excited about altcoins. And even when you do talk about an altcoin season, which I kind of believe will happen, you still have some skepticism. So it's not even like people are taking it for granted and just seeing where they need to place bets. It's more about them questioning even the whole concept. And so, Tom, I don't know if you've heard any other cool names or alpha that you want to share.
No, I think in general those were the top mentioned players on the BNB side. There's some a little bit more, a lot more players with a lot of substance, like Yellow Pepe. I think that's something that is generally catching a lot of attention. But I think generally speaking, you put it in a really, really interesting way, since my key takeaway is that people are actually surprisingly bearish. And I think I said last week that we're in this phase now where we'll be making, and this is on the Bitcoin side, more and more all-time highs, and people will get quite excited about it. But 5 minutes later, they'll realize, was that the top? Was that the top? And then they sort of panic and sell. And this is exactly, I think, what we've seen yesterday, which I think is really, really funny. When I think, in general, from the fundamental side, we're looking really, really good. I mean, we did reach 125,800 ish, which is very, very good. That there's a lot of corporate accumulation that's happened, and I think we're looking at Strategy. They accumulated 22 mil yesterday. Tether acquired another 9,000 Bitcoin. So there's a lot of corporate buying still happening. The other really exciting bit, and that's something that I generally am watching, is stablecoin market caps, right? And if we look at Tether, if we look at Circle, if we look at a lot of other players, then we actually realize that there's a lot of money that's now circulating on chain, and that's something that generally is this sort of rocket fuel that eventually the market needs for a lot of participants, and especially new participants, to sort of join the party. And that's so I think from that perspective, to me, this is the perfect wall of worry that we now can sort of climb up. And I would generally expect, yes, so we'll see Bitcoin grinding higher in Q4. And with that, at some point, and I thought we were going to hit, about 60% on the Bitcoin dominance side. We didn't quite hit that, but it looks like the breakdown sort of already starting. And that's what I'm looking at for at the moment, is essentially that allocation into altcoins. If we look at, and obviously this is one indicator, there's a lot more, like I always say, but if we look at the sort of market, the crypto market cap sentiment indicator, we're still at 60. We just made an all-time high. And I think generally speaking, we're in a very, very good place. We've seen Bitcoin obviously make a new all-time high. We have not seen Ethereum making an all-time high. We have not seen any of the other, except for BNB, which is for different reasons, but I generally agree that's the ecosystem is looking really, really interesting. And I think the other bigger thing that I've seen is Bitcoin yield, Bitcoin being put on chain in order to make it more usable. And that's something that potentially, we'll see this pan out obviously, but that's something that's going to bring in a lot of Bitcoin liquidity. And that can go into, there's a lot of, Bitcoin lending that we'll see, which is going to give this market additional liquidity. And I think ultimately what's not to like, we've got 2 more rate cuts come this year. So very bearish to sort of summarize for where we're at. and this is sort of the best alpha or contrarian thing I can share today, probably, is we're still early, and I think there's a lot more to come. What were your thoughts on generally on market sentiment, Justin?
Well, one of the things I expected you to talk about, and I'm curious to hear your take on it, is I think gold is hitting new all-time highs as well. Like in the past 24 hours, it was like $2 away from 4,000. And so I feel like just on the macro side, and of course there's the rate cut expectation, but also maybe worries about the US dollar or like a long-term shift, as it comes to the US or, being dependent on a single central bank, that pushes everything higher, right? And so seeing gold hit new all-time highs while Bitcoin is also crossing 125K for the first time, even if it actually retraced a bit, like I was just kind of correcting or interjecting, but one of the earlier thing, which is I think it pumped and there were some people getting liquidated and then quite a lot of people sold, and then it dropped back down to like 122 very shortly, and then it regained 125 once again. And so I don't know, that makes me so bullish. And again, to see gold kind of breaking new levels simultaneously, it just reinforces the narrative of people want to hedge their exposure to the dollar, right? And I think briefly you had or maybe I was just looking at it on my screen, but the US dollar, and I feel like it's not holding up. Oh, okay, my bad. It is actually holding up relatively well. I don't know. Maybe I'm just letting my own bias guide me. But I wouldn't be surprised if people start to go more into gold and Bitcoin, and just, so I think the trend can keep on going for a long time. That's it.
I think, and then I think Satirius probably has a couple of ideas, perhaps around MicroStrategy or other sort of Bitcoin plays. But one thing that there's actually more alpha to come that I've been looking at is Bitcoin mining companies, because they've been looked at in a very, very so there's Marathon Digital, there's a couple of others, and so there's two things there. So if we're looking at oil in general, it's been holding up relatively well, and that's sort of, well, not holding up, more like keeping at a very, very decent level that would fuel sort of an economy into this last sort of cycle of any sort of expansion cycle. So from that perspective, that's looking really interesting. And at the same time, the Bitcoin price is catching up at this point. So if you don't mind typing Mara, M-A-R-A, and again, obviously, do your own research. This is just sort of a representative of a group. But if we look at this, if you can zoom out, yeah, no, that's perfect. So we can actually see that they've been, I think this maybe, yeah, no, perfect. So you see that they've been struggling, I think, quite a bit. And we sort of in 2021, this was due to the fact that there was not a lot of traditional on-chain exposure. I think the high was in the low 70s, whereas we've been struggling to generally hold up quite a bit. And if we essentially look at 2024, 2025, it's not done a lot. Despite, I mean, this is a very, very competitive business, because obviously you need to manage the capex cycles. You need to buy new miners. You're managing energy costs, right? So that's something that's quite critical, which is lining up to be quite good, though, I think. And ultimately, it's a function of how much Bitcoin you can accumulate in token terms, but also as to what that means in terms of monetary value, right? Because they obviously need to sell some Bitcoin in order to fund their operations. And from that perspective, this is something that's probably very, very high on the risk curve, but that's something that I've been looking at, that I'm going to be watching to break out. And once we sort of hit that 26 level, that will be a breakout that I would definitely be a buyer of, and that is potentially a really interesting play.
I love this.
I think especially sort of like crypto equities has a lot of scope, especially now, I think, with more sort of non-degen retail participants who just want to gamble on chain, as you're getting sort of wider TradFi adoption, I think a lot of people who are traditionally more comfortable investing in equities are probably naturally going to try and gravitate towards stuff they can buy from their Schwab or IBKR accounts, as opposed to having to like on-chain stables bridge to fucking BNB and go through all these hoops. It's just such a pain in the ass. And so I think for someone who's not a crypto native at this point, I think crypto stocks seem a lot easier way to get some exposure to the sort of the crypto run as well. So I think something I've like started looking a little bit at, not a huge amount. I also think the Tether IPO will be quite interesting. It also makes Circle look incredibly cheap at these levels because their revenue is not that different, but the I think the Tether IPO is what was it, like 500 billion or something insane, and Circle's a fraction of that currently.
Do you know what the relative market share of one versus the other is? Because of course that has to be.
I don't know off the top of my head, but I think Tether's like twice the size of Circle or something. But the market cap for the IPO is like 10x.
Right. Okay, yeah. So
I think there's like a bit of a dislocation there. I did see a post going into more detail about it a while back, but yeah, Circle, sorry, is only 33 billion right now, and it probably peaked at like 50 or something.
So Thierry, can I be a bit contrarian? And not to say that I think your relative play of Circle looking cheap relative to Tether is totally on point, right? I don't know. I'm just not that bullish on stablecoin in general. And I don't know if it's because I've seen too many stablecoins. You know, when I was at market making firms, I mean, I've told that story 100 times, right? But there were weeks where I would have like several new stablecoin projects kind of coming in. And I feel like because it became a trend, everybody was trying to jump on the bandwagon. But the thing is, stablecoin are by definition not a first mover advantage. So I'm going to contradict myself in a minute, but there's only so many people that can win at this game, right? And of course, you can have multiple players depending on the geography and the setup and the value add and the value prop and the community and the communication, blah, blah, blah. But you can't have 100 different stable coins that are by definition dominant. You can only have a few. And then the next thought process I have with regards to both Tether and Circle, which are the dominant one, and so you would think it's very hard to displace. I don't know if the value prop is that attractive, you know, for a lot of users. Like there's a lot of innovations that could be done to either make the flow a lot faster, a lot easier to on-ramp, off-ramp, or, you know, pass on the yield to other people. And so I don't know if they're the coolest stablecoin out there and if they're going to remain dominant long term. So it's kind of a contradicting thesis that I have, where I feel like not everybody can win. It has to be a few players, but I'm not 100% convinced that both Tether and Circle will continue to be the winning ones, even though they are the dominant players right now. I don't know if you guys have thoughts on that.
I think one thing I will add generally with Circle, and I'm exposed myself plus, but I think that generally speaking, this is a very this is an important stepping stone for this industry, right? But ultimately, the way to think about it is what's their ability to generate revenue, right? And with rate cuts, that's going to come down. So this business is going to get a lot more competitive. The fixed costs are relatively high. I think the difference between Circle and Tether as well is that Circle's a lot more regulated. They're a lot slower to generally move. In the US specifically, they have one disadvantage, and that is that they cannot issue yield. So they can issue yield to retail specifically. So they can provide yield on, and this is actually one thing that I'm quite bullish about. So I hear a lot of chatter of people suddenly discovering, oh, hang on a minute, you can earn 4.25% on Coinbase on your USDC. And I think that is actually a great catalyst to sort of, pull people in. And then they'll realize, oh, wow, I can earn 125% on Yellow Pepe. And do you know what I mean? That's sort of I can't remember what bull market that was, but it could have been 2018 or maybe like the 2021 craze, when it was about yield and when it was, provide liquidity. Impermanent loss, what's that? And I think that's sort of it's
also
sort of
the
that,
days of Luna guaranteed 20%. What can go wrong?
Exactly. What can go wrong, right? And I think that's generally quite, personally, I think bullish. I think in terms of the difference is going to be in terms of stable coins. I think that they're going to be a lot more regulated. From what I heard is that there's a lot of chatter to have, and specifically in the US, to eventually have Bank of America coin, to have a JP Morgan coin. And if you think about it, it's a great mode for a bank to keep their customers, right? So there's obviously a plethora of things that bank can offer, but making sure that you get your salary paid in Bank of America coin, and then what about your mortgage potentially? Where is that going to be paid out of, right? And then there's going to be players that will capitalize that will clip them on the conversion from Bank of America to JP Morgan. So there's a lot of business models that I think we've not really seen yet. But yeah, ultimately, I think the business of stablecoins is really sweet at the issuance, because you can actually clip them as in your customers quite a bit, especially when there's bigger redemptions. And then this is a volume game, right? In terms of market cap, by the way, we're looking at, I think, the 170s in Tether. So there have been some posts, and this is an all-time high as well. And Circle is hovering around 70 in market cap terms. So there is a bit of a difference, but ultimately I think we all know this, but I feel a lot of other people don't. This is so easy to move money. It is frictionless to an extent. I'll say if you work with an exchange, if you don't have to deal with gas as retail, I think it's relatively easy. Once you realize that depending on what blockchain you're in, you need to also get a gas token and sort of make that work, which is arguably, for us, it's normal, right, to sort of stake something and utilize the LST to do something
though, for like a non-crypto native to have to worry about native gas. And then also it's like, I need Ethereum, but I need Ethereum on Arbitrum. Like, what does that mean? And it's just like, it's so convoluted. And even now, just as I'm sort of a bit more risk on at the minute, like just moving funds and getting funds across to BNB ecosystem and things like that, it's just been an absolute pain. But ultimately, though, I do think even more largely outside of just the bank competitions specifically, I think the US is also clearly signaling they want to become the global leader of stablecoins and stablecoin issuance, because I think it helps sort of protect the hegemony of the US dollar globally. And so I think if there were to be an alternative to the USD on chain, I think that's going to sort of further degrade the spread of the dollar. And so I think it's massively within the US's interest to kind of ensure USD-based stablecoins become the de facto sort of on-chain payment rails. One other point regarding the stablecoin issuers, I do agree that their primary business model is made from buying essentially like zero risk T-bills and getting yield on that. And as rates are projected to come down, that's going to definitely affect their sort of like top line. But at the same time, if we do sort of enter into a bear market at some point, I think we might also see sort of an increase in people wanting to sort of park their funds in stable coins. So that might help sort of like counteract some of the pressure. One thing I did notice though last cycle, which might be different this cycle, but given the amount of FUD around things like FTX and exchanges, if you actually looked at how many stable coins are on the balance sheet of Circle, during the bear run, Circle lost about half of its AUM as people were actually withdrawing it for USD. And interestingly, I think that also benefited Tether, because people were just swapping their Tether to USDC to then withdraw an off-ramp USD from USDC via Circle, because it was a little bit more legitimate. And so that kind of added sort of more pressure to Circle. So I'm not sure what to make of it. I think stable coins are interesting. I'm not sure if they're going to yield insane results, but I think it's just one part of the crypto basket that is worth looking at for now.
Do you guys have a strong view, positive or negative, about the yield-bearing stable coin? And I would put stable coin between brackets, as in like the Ethena and others. I feel like there's probably a lot of duplicates that I can think of, like Theo on, is it Hyperliquid? There's another one on Solana and so on. So essentially doing that cash and carry trade or basis trade, to generate that 20% yield. And part of me is like, whenever I'm putting money into, I don't know, Morpho or Avid, I'm earning 5, 6, 7, 8%. And then I'm looking at the guys, on Ethena that still hasn't blown up, that's still performing well and earning way higher yield. I'm like, am I being way too conservative? Am I being dumb? Or am I the smartest guy in the room because I'm preemptively hedging some massive market risk? And I don't know.
Yeah, it's probably dumb in a bull run, but as soon as the bull run stops, then it's going to be the hardest thing you've done because... Yeah, I think lots of lessons learned with things like Luna and all of that. And so quickly your dollars can become pennies on the dollar.
And especially because it moves so quick. So, for example, with the Anchor, the Luna UST yield protocol, since the beginning, I was very clear-eyed where I was like, I'll take the money out when I feel like the yields are not attractive anymore. So I'm not saying that it's going to stay at 18% forever, but it will drop down gradually to 15% and then to 12% and then to 8%. And then it will become less attractive. And I'll just put my money and put it in something that's either higher yielding or relatively safer. But I don't know if you remember that day. But so for me, I had quite a decent amount of money on Anchor. And then in a snap of a finger, the stable coin itself wasn't worth anything. So it wasn't necessarily an issue with the yield. It was that you could take out the money, and what you could take out was essentially worthless. And it didn't matter if it was Luna or UST, you were screwed either way, right? And so that's why I'm a little bit traumatized, of all that. And so when I think about Ethena, I'm like, it's a very different risk profile. It's a very, I would say, it's somewhat transparent about what the risk is and what the methodology is. I don't know. I'm still on the fence. I'm still not staking stuff in USDE, basically.
I think so. If the way I like to think about this stuff in general is, so you're risking 100% of your principal for 10, 15, call it 20%, and so in order to sort of double that, you have to wait 5 years. And my mental model is always, in 5 years' time, is this thing going to be still around? Is this thing going to still be yielding 20%? And is this safe? And ultimately, that's when risk reward comes in, and when we're also having to assess the general market and as it stands. And ultimately the question is, well, sure, you might want to risk off a little bit because you think perhaps Bitcoin and generally the market is getting a bit frothy, but at the same time, wouldn't sort of risk off mean something completely different, which is just move it out, don't touch it. So I think in general, there is anything that's sort of accumulating a yield north of 8 or 10%, and probably 5 is the real number here, is at some point gonna not necessarily crash or break down, but it's certainly a lot riskier than I think the yield would generally suggest. And so from that perspective, I think keeping that or swapping that to Bitcoin at this point is the better trade, because ultimately then we're going back to duration. In 5 years' time, would you still want to hold Bitcoin? Personally, for me, the answer is yes. At 10 years' time, yes. 15 years' time, and at that point, this becomes sort of a liquidity issue, right? But if you do need that liquidity, why would you want to risk it for a very marginal yield? So I think from that perspective, for me, it's an absolute no. I think if we're thinking of things like temporarily parking it on highly regulated exchanges, like if you want to do Coinbase, that's probably it's probably a lot better there. Although to be fair, there's a lot of cybersecurity risks, right? And if Coinbase at some point gets hacked, obviously we don't hope that that's going to happen, but it could happen. then your money is still at risk. So ultimately, I think at that point you might as well just get market exposure or just take it off anything that's hot wallet related.
So one thing to add on that as well is I think the sort of like allure of getting, say, 10 to 20% annualized is also not that great return over, say, like a 3-month period where you're looking at maybe like 2.5 to 5% for what is potentially increased risk as we go towards the end of the bull cycle.
Yeah,
100%. And so, Tom, would you say like the thing about not staking, would you keep that just for Bitcoin, or would you apply that to stablecoin as well? Like if you have 10K in USDC, what essentially you're saying is better to allocate it to a quality asset and take the risk or hope that it appreciates versus just putting it into something that might be too risky and make you lose your whole capital?
Yes, I think if you want to keep 10 grand USDT or C because you've got some expenditure coming up, then definitely don't put it anywhere that is even remotely sort of risky. I think that's something, or understand where the yield is coming from. If the yield is coming from US Treasuries, which would put it probably closer to 4%, then that's as although the US government did shut down. So speaking of risk, right? There's nothing that sort of doesn't give you exposure to any risk, but it's a matter of whether that risk is worth it. So ultimately, if you need that liquidity, there is very few places where you can put it, and then the yield, if it's UST, US Treasury related, that's probably closer to 4%. So that's something that I would do unless I needed that liquidity. And if I didn't need that liquidity, then at this point, I still am a big fan of having exposure to the market. Again, this is my view, and I could be completely wrong. And Bitcoin could be, as far as I'm concerned, could be going down to zero tomorrow. But ultimately, if you need that liquidity, hold on to it. If you're looking to get exposure to risk assets, allocate to high quality assets such as Bitcoin, Ethereum, and meme coins. The latter part is not for everyone, but certainly for some. But I think a barbell portfolio. I think we touched on this last week as well, where you're looking at high market cap tokens, which is it's all about access, right? So where do people will get access to these tokens, right? So if is a Dogecoin more likely to get people invested because it's going to be floating around a screen in a Coinbase account versus Yellow Pepe, which you can only buy on a DEX, right? Absolutely, right? And I think these are all things that will matter. So from that perspective, anything that's high market cap, I think is interesting, and anything that's sort of degenerative enough, whilst the access is still sort of for those that will sort of tip their toes into it, is reasonable, is certainly interesting.
Doge looks primed as well, by the way. I'm not sure if you're still holding, Thomas.
Sotiris, don't incite him. Thomas is already, I can't say how deep into Dogecoin. So I think he literally said, so we met for coffee during Token 2049, and I think he said the words, "You can never get enough Doge," or something like that. So yeah, I'm afraid for you, Tom.
I'm here for it.
Look, I think if I'm wrong on this, I'm more than happy to be wrong. But ultimately, we've not thesis there very, very, succinct. There's going to be altcoin season because everybody's doubting it. Bitcoin's going higher because everybody is thinking we already have seen the top, right? Perfect wall of worry. And, the whole, this time is different. I think we've seen too many cycles to be thinking that, it would be different this time around. And I think I'll stick by that. And if there's a lesson learned at the end of this market, then I'll certainly take a look. But ultimately, high market cap coins, meme coins are certainly. I mean, if you look at, and I'll go off rails a little, but if you look at Pokemon trading cards at the minute, I mean, they've been picking up, right?
Yeah.
And I think collectibles in general, and I ultimately look at meme coins as a collectible, right? That's what they are. And you want to collect as much as possible. Certainly, Doge is fungible, right? But ultimately, it's still collectible. And at some point, I think it's a religion, much like any other coin, right? Maybe a little bit more religious on that front, but ultimately that's a very, very nice setup, and it's something that people will get excited about more than your Bank of America stock, or JP Morgan stock. Not saying that those are bad investments, but I think in terms of emotional attachment, certainly we're looking at a very, very different vehicle, and that's what makes these things so interesting.
By the way, Tom, I have to note, you've mentioned Yellow Pepe twice since the beginning of the broadcast. Tell us what you know and what you're doing.
I think so. I've actually not got any exposure, but it's just something that I'm watching because it is looking very, very interesting. And I think there's a lot of there's major influencers there's one major, which is James Wynn, which is I do like to follow some of the crypto KOLs just for the fun of it. And this is one of those things. And look, ultimately, I think we all know this is worth absolutely nothing, and I just want to really stress that. But with crypto, I think in general, a lot of these tokens are worth nothing, but there is a time to own them. And I think this is, if you think about this, right? So somebody came out with Pepe, they made a lot of money, they executed really well. And I just find it remarkable how, you can now create another token that's sort of, playing into the BSC ecosystem that's just yellow because it's probably Binance BNB, and I think could be interesting if it goes viral. But again, I think access there is limited. So from that perspective, I think upside is also going to be limited. But yeah, certainly a meme coin I'm watching.
But so it can be a combined play with what Satiris is saying about the BNB ecosystem kind of getting a bit more heated, buying Cake as like a venue on which you can trade stuff, and you've got a new meme coin which is meta, if you will, like it's for the Pepe holders into another meme coin. So yeah, could be
another meme coin I just ate is also Pup on BNB.
Okay. Nice.
Right.
Okay. I mean, it looks like you've already made a ton of money just looking by the chart. So depending on when you got in, but it's
not yet, but it's looking interesting. Quite a lot of buzz. Yellow Pepe as well seems kind of interesting. One thing we also mentioned that I think is slightly under the radar at the minute is Pokemon on chain as well. So cards has been one I've been keeping a fairly close eye on. I had a nibble as well a while back, but these are like, sort of Fidgetals on chain tokenized Pokemon cards where this company sort of takes custody of the cards and then provides you a sort of tradable NFT, essentially, sort of token version, and then you can burn the NFT and take ownership of the card as and when you want it. But the nice thing is it kind of gives you sort of access to deeper liquidity and tradability of these cards, and like potentially as well some sort of like refinancing options like you can get with DeFi without having to faff about with self-custody of all these fucking Pokemon cards and stuff. And one interesting thing as well is Binance recently just made a tweet talking about, or a blog post I believe, talking about collectibles digitized on-chain Pokemon cards specifically as well. And so for like a relatively low cap, 50 mil market cap, I think cards could be one to sort of use to get a bit of exposure to that. And I think as well, just like the overall frothiness in Pokemon at the minute lends itself to that. One other thing I know you've spoken about before is like Total 3. And so I think we're seeing that starting to break out now, which is obviously a good indicator for altcoins.
Yes.
One, is there a lot of noise in the background to my mic, or can you hear me okay?
We can hear you. We can hear you.
Sorry.
It's all good, man. Don't worry, man.
One thing I did want to just touch on, though, is overall froth in the markets, though, because TradFi pumping, gold pumping. I don't want to be. I'm generally a bulltard at the best of times, but at the same time, everything is feeling pretty frothy right now, and so I'd love to get your guys' gauge and sentiment on how you're feeling when it comes to equities. Obviously, gold rallying, silver rallying, crypto back at all-time highs, and then even just like tangential things like Pokemon cards are also at all-time highs. And weirdly, they've outperformed every other asset class the last 10 years. But I think it's similar behavior that we were seeing back in sort of 21 as well, where you have mania around Pokemon cards, you had mania around crypto, you had mania around meme stocks like GME, Tesla, all of this. And you're kind of seeing that now with AI being the new sort of meme stock. And so, I don't know, I'm risk on, but my sort of worried spider senses are also tingling. But things could remain irrational for way longer than anyone expects.
I think something that makes sense based on what you said, in terms of frothiness, is if you look at the chart that you're showing right now, I believe the top indicator is the RSI, and that's like showing almost like a case study perfect, like bearish divergence with price, right? So you've got one top, two top, three top, and you've got one top, two top, three tops that are decreasing on the RSI. If we were to, again, I'm a skeptic on technical analysis in general, but if you were to take that into account, it would point towards some kind of retracement, which either is like the global market, so maybe Bitcoin and Ethereum are kind of in a similar setup, and then the entire crypto market cap needs to pull back, or it's just the altcoins relative to BTC, and then that might play into the narrative that Thomas, I think, was talking for a while, which is you could see another pump in the BTC dominance, and then a retracement after altcoins outperform, and so you can have this weird play that could take place. But here it's, I think, so for example, the RSI on the BTC dominance looks so much healthier, right? And so it almost looks primed for like an increase. So BTC outperforms, altcoins underperform. And then finally, BTC might underperform and kind of give way to the altcoins to really shine, basically. Also, and that might take time to play out.
Simplistic standpoint, if Bitcoin does sort of stay above all-time highs in a sort of meaningful way, I think that's naturally just going to be a vacuum of liquidity and attention, at least for
in what sense?
Like moderate short term, because everyone's going to just be talking about Bitcoin again. And so I think a lot of people are going to be like, oh, Bitcoin's the shiny thing now. It's like with the Trump token, for example, when that launched, everyone was like, okay, I need to long this. If I'm already fully allocated, how do I get more funds? I need to sell my other meme coins. So the Trump token pumped like crazy, but the rest of the meme coin market just got eviscerated because everyone sold their other shit coins to buy flavor of the week. And so I think a lot of people are still probably sidelined on this. So the Bitcoin play is maybe going to be less extreme, but I think it's also something to sort of note.
Tom, I'll let you speak also about, I think, the question that Satish was asking before, about the frothiness and so on, but I almost feel like you and I are on the same page, and it's so interesting that we keep having that same discussion almost like at every call, where I'm so not in line with the idea that there is frothiness in the market, and I don't know if it's a question of how we define frothiness, but I feel like, interestingly enough, we are breaking all-time high, and you do not have the euphoria that you've had in previous cycles. And maybe it's because euphoria is presented differently in this cycle. But for example, gold hitting new all-time highs, don't really hear about it that much unless you're reading through articles of financial media. You look at BTC hitting new all-time high. Yeah, everybody was talking about it within our own echo chamber and maybe a few articles here and there. But I don't feel like there's mania because it went from 120 to 125K. And so equities hitting new all-time highs, I just don't feel like there's euphoria. And I feel like there's very little headwind to stop us from keeping going forward in this rate environment, with the US dollar performance, with everything that's happening, with geopolitical tensions that might get kind of resolved. And so I'm like, the idea that on a medium or long-term basis, I would rather be holding US dollar versus any other asset, to me is crazy. Famous last words, and probably I'll be here in 6 months, crying in front of everybody and having a meltdown. But the point is this, right? It's like, if you told me right now, would you rather be holding 50% of your portfolio in stable coin and 50% in traditional assets, risk assets of all sorts, precious metals, crypto, and so on? Or would you rather have 100%, 100% all day long, no questions asked? And I'm not saying there won't be pullbacks and so on, but again, on my side, not feeling the frothiness, not feeling the euphoria. I think we're at the levels we should be based on, money, liquidity, geopolitical issues, loss of faith in the US dollar, the growth and the pace of adoption to new technology. And you could even make like an even bolder statement in terms of AI, robotics, blockchain, genomics, all that stuff is more in the future and not less. And so that's it. I'll stop my rant. And so
I agree. I'm also risk on, but it's just this very nagging feeling of very similar conversations we had last cycle as well, where it's like everything feels frothy, but
no, I disagree, man. I disagree so completely with what you're saying. It's not like what we were discussing in the previous cycles. And I really suspect that because you spend so much time on Twitter, you stay in your echo chamber of degens, and then you see the prices go up and you're thinking there are degenerates and the prices are at all-time high. Therefore, there must be froth. But I think you're not seeing it the other way around. As in, there is froth and then there is degenerates and higher levels and so on.
And I do think we haven't hit peak froth, but I think we're definitely on the road to a blow off top.
Why don't we have a quick look? I think so. Curious if you don't mind pulling up Google Trends. And I actually quite like to not show exactly what this looks like, but ultimately what we'll see, and we'll just start with Bitcoin and we'll see like where we're at. Right? If you just exactly. And obviously, I mean, one thing I have to say up front is that ChatGPT is quite popular worldwide, and I think let's pull up. Let's move out. Let's do 5 years before we do anything else. Yep. Right. So in terms of that, I mean, it's looking. So there was certainly very recently there was a bit of a hype, but ultimately we found a nice bottom. What it looks like, and there's not a lot of craze. Right. One thing again I need to stress is we've got ChatGPT around, which I don't know how much of the search volume is that taking away. Perfect. That is that is sort of the really, really smart one as well, and that's sort of very much in line. So there's a high correlation, but it means that there's still a lot of people in the year of 2025 that don't know how to buy Bitcoin or where to buy Bitcoin, right? Which means there's fresh blood still around, which is generally a good thing. And if you don't mind sort of going back and let's look at Bitcoin and gold. That's I think quite an interesting one, and I think you will. Awesome, yeah, and then gold, and that is so interesting as well. So you guys know this, but I track this all the time, and you can generally see that gold is sort of generally getting more and more popular, right? A new all-time high, but at the same time, there's not too much craze because a lot of the gold. So where gold and I think Bitcoin differ at this time is that there's a lot of central bank buying still, and that's what's been driving the gold price higher. Right? And for as long as that's sort of going on, we'll have a very, very constructive market, which is why there's some retail sort of looking into gold, but that's not going to be moving markets necessarily. Whereas with Bitcoin, it's a very, very different thing. Bitcoin is still very volatile for where it stands in market cap terms, right? So there's that, and we can add a couple of cryptos as well if we remove gold, and let's just swap gold for Ethereum, So obviously those two are, a bit more interesting. You'll see there's a lot more volume to be had on Ethereum, just generally for people to understand. So Bitcoin is a very, very different asset. It's a lot more it's a lot more interesting, I think, to the general public. And I think there's a lot of people out there that still don't really know what Ethereum is and what it does. They just think, oh, well, it's the second largest, and maybe one day it will hit. It will also hit 125K, right? Perfect. There's Solana. I think we can even remove Bitcoin just to sort of zoom in a little bit when we're getting into the more sort of altcoin area. So we've got Ethereum, we've got Solana. What else do we want to throw in there? Could throw in. Yeah. That's I'll allow that. Yeah, Link is so Chainlink probably, yeah. But this is where it's getting slightly less interesting, simply because you've got the whole like Link versus Chainlink narrative, so it might be a bit misrepresenting, but yeah, I think probably Dogecoin, if you go down the sort of market cap. What else have we got?
But you see, on none of the charts,
XRP, we probably use that.
Mm-hmm. Oh yeah, XRP is another one, for better or for worse. That's true. But on none of those charts,
point about not being frothy.
Yeah.
Which that is interesting, isn't it? Like XRP is really, really interesting. Not saying that this is going to do anything to the price, but it's just in terms of perception, in terms of how it's been hyped, right? And that's sort of in line. Nothing moves sentiment like price, and I think that's becoming super evident if we look at this. So I think generally this isn't nothing. This isn't anything that can be traded. I just want to really stress that. So, for instance, what you see in the 2020. In the absolute COVID disruptive sort of market environment, a lot of people were Googling Bitcoin as well. And that was a very sort of contrarian signal where the public got actually very smart about it and just, went all in. Whereas this what we're looking at right now is very much, it's very much driven by sort of sustained sentiment. And we also can sort of see, if you scroll down, we can see the breakdown by region, which I think is quite interesting. So there's sort of a lot of more altcoiny markets. Exactly. And I love just having a bit of a click here, because you can sort of understand what's happening and sort of helps with what's popular in what region. And it really helps to zoom out of our universe, which is, I suppose, very much like crypto-centric, right? We obviously were exposed to this every day, but not everybody is. And that's one thing that I'll look out for. Everybody exposed, meaning a lot of people are searching for Bitcoin because they want to see where the price is at, and they don't have anywhere else to track it.
On that note as well, I saw, I think it was like Andrew Kwan or someone else on X say about how one of their bigger takeaways from Token was that they felt Asia was actually like lacking in sort of like crypto like acceptance, crypto regulation, adoption, compared to the US. Because I think obviously with like the US new admin under Trump, they've been pretty much as like pro crypto as you can get, almost comically so, and probably to the detriment of a lot of the initial ideals that Bitcoin was kind of originally created around. But I more care about price go up. But I think it's potentially interesting as well to kind of look at the split between US, Asia, and EU. I think a lot of people have basically just written off Europe as a regulatory cesspit that almost no innovation is going to happen in.
That's about right.
As 3 Europeans on the call, but again, maybe people are like overly bearish Europe and it's going to surprise. But I think for the short term, at least, it seems like US is now the place to be for crypto, which is also quite surprising considering most of crypto's history. The US has been the boogeyman and regulators have been the ones sort of stifling innovation. But it'd be interesting to kind of get your take as well after Token, for example, of like what you're seeing across sort of US, Asia. I know, Justin, you kind of straddle professionally a lot of different regions as well, and so love to get your thoughts on that.
But I think I would corroborate in the sense that I think Hong Kong and Singapore totally feel like yesterday in terms of like project innovation. At least I'm not talking about financial services and so on, because there's like, I think with Hong Kong and Singapore there's such a long standing history of exchanges, custodian, OTC transactions, you know, being performed, family offices and such, that there's still a lot of transactions that's happening in Asia. Not even speaking about Korea, which is its own market. But I think in terms of like a startup setting up a new base, I definitely don't think that Hong Kong or Singapore are top of mind. And I still think that Dubai right now is buzzing. Don't like Dubai, wouldn't live there, but I still think it's buzzing from a crypto ecosystem perspective. And then going back to your question about the US, yes, I think that becomes almost like the default choice for anybody, which is you're going to start like a crypto project. Obviously, you should be in the US. Is there a reason why you wouldn't want to be in the US? And then that comes down to the team, the community, the focus, existing partners, maybe VCs and such. But again, I would say the US right now is so powerful and exciting for crypto people that it becomes the default go-to place to be based in. And then you move on to Dubai as a second option, low taxes, blah, blah, blah. Definitely avoid Europe. And then go to Singapore, and Singapore as a third option, Hong Kong as a fourth one. And then you go to the other regions when you're looking for like hyper cheap labor for digital nomad. I'm thinking, of course, about Indonesia and Vietnam and Thailand and so on. But that's how I think about it. Yeah.
Yeah, I think that makes a lot of sense. And one thing that we didn't even touch on is, and you know, Sotiris, I apologize, it's the UK, because what's been really, really quite interesting is that and I think that's, very accurate there. Remind me, what's their shitcoin called?
Sterling?
Yeah, exactly. I think something like that.
The British pound?
GBP?
Yeah. I think it's GBP. I think it's on the chart, right? It's been just going down. But no, I think, you know, putting that aside, what's really been quite interesting, if you think about, there's been a lot of chatter about capital controls. It seems like of late they love control in a lot of areas, and now they're sort of talking about capital controls, which is, you know, if you know crypto and if you know this space, is just laughable. But ultimately, for a lot of, you know, retail, for a lot of people that aren't as savvy in this space, if you think about it, so. And I'm not even sure what the sort of current rate is that the Bank of England have sort of assigned, but it would definitely be lower, right? Both for the euro and for the British pound. But generally, if you're now, you know, you're on an exchange and you get your 4% on US dollar, right? And ultimately, you can accumulate any sort of token is denominated in US dollars, right? If you ask 9 out of 10 people in the UK what the sort of price of Bitcoin is at, I think they will likely say 125, especially if they're very much ingrained to the ecosystem. And so that's why I think there was a time when the Bitcoin versus Euro didn't make any all-time high just yet, right? Which is something that is not really traded to or spoken about too frequently unless you're really ingrained in these economies. But that's, I think, an interesting one, right? Because ultimately, there's a lot of money leaving the traditional systems, right? Leaving banks. So what are they going to do? How are they going to innovate the regulation around stopping people from innovating, right? I think that's probably the best way of putting what Europe and the European mind does in general. And that's and that will not certainly help, right? So there's MiCA in Europe, which is very much geared towards bigger players. You can arguably argue Singapore isn't also the best place to start a business, especially if it's crypto, simply because it needs to be highly regulated. You need licenses. So I think Hong Kong might be actually more appealing at the minute. And Dubai, obviously, a lot of firms, absolutely. There's a lot of chatter about Dubai, so super interesting. And they obviously looking into Bitcoin quite a bit as well. they're looking to innovate, right? They're looking to diversify their business models without jump on anything that they feel makes sense in the long run or has a potential to sort of evolve into giving, you know, Dubai or the UAE this sort of edge, and they're constantly looking into new things. But ultimately, I think this comes down to mindset as well a lot. I think, you know, and certainly labor cost is an aspect, but I think Europe is very much about bottom line. That's sort of the best way I can put it. It's, oh, well, I save, you know, 100 euros on my tax return, and then everybody's like cheering, wow, that's great. No, that those 100 hours were, you know, spent really well. Whereas the mindset in the US is more like, okay, well, how do I double my income, and how do I double it from there? And that's, I think, if you look at this over a long period of time, that's a real compounder. So from that perspective, absolutely, I don't think that any market is ever going to outperform the US, unless something really adverse were to happen. But it comes down to mindset, and there's a lot of you know, regulatory rails that at the minute are looking very, very bullish. USA, and there's a lot of talent here as well. It is expensive, yes, but I think looking at the sort of revenue growth, the projected revenue growth, I think it's reasonable to be spending more money, again, provided with that sort of revenue increase in mind. So definitely, I'll be looking out in the US, and I would think the next sort of big project is likely going to emerge here or Dubai. Those will be two markets I'd be looking at.
Nice. Yeah, no, makes
100%.
sense. And I guess as well, we've not really spoken about everything else that's being developed as well. And so I think if you look at, obviously, AI, robotics, biotech, genomics, a lot of that innovation is also coming out of the US, as well as China. And so I feel the only sort of frontier technology that seems like China's not really focusing on right now is crypto. But as far as like getting exposure as well, something I have sort of been looking at more is like what's future tech, and again, everything feels frothy and speculative, but I do think sort of robotics is going to be very vogue in the next couple of years, even more so than it is now. I know, Justin, you've spoken as well about sort of like energy and batteries and things like that. I think there's probably quite a bit of low-hanging fruit still when it comes to sort of more frontier technology stocks as we sort of go into this next AI-driven, hopefully, period of growth. And I think as well, I hate sounding so bearish on these podcasts because I've been so overwhelmingly bullish on crypto the last few years. But if we are sort of somewhat later into the Bitcoin cycle, I think it would also behoove us to look at some alternatives as to where we could roll profits into. And so I think AI doesn't seem like it's going anywhere, especially from the chip standpoint. The demand for chips seems like it's going to keep increasing. CapEx expenditure of the hyperscalers keeps increasing. Energy demands are going to need to increase with it. And then you have all of these new AI-enabled technologies like robotics are now actually starting to make some huge leaps in their control systems, like what we're seeing from Unitree with their humanoid robotic agility is kind of insane. A lot of the videos I'm looking at from Unitree, I'm like, are these real or are these AI generated? Because these robots are moving scarily quick and scarily fluid, and they're springing up off the ground in sort of half a second type thing, to the point where it's kind of scary and dystopian as well. But as an investor, I also want exposure to all of that because it's the future.
The only thing that bothers me I'm in 100% agreement with you. The only thing is, I think when it comes to AI and robotics, a lot of the value has already been gained by the earlier investor. you know, so as in like private equity, and then it lists, and then a few years pass, and then now we're aware of it and we're looking at it and we're like, oh, should I pull the trigger? And when we do pull the trigger, it's for like a small ticket. Whereas I think the edge we, and I mean like us three as a group maybe have is, and I think for any user really as well, is in crypto you can still kind of get early. Maybe not Bitcoin, like maybe it doesn't feel that way, but for a lot of other cryptocurrency, if you're interested in the space and you're willing to take bets on new trends and new technologies, you can really get in at the ground floor with all the risk, you know, that it entails to get some kind of value. And I feel like AI, for example, is like, cool, you can invest in Google, Microsoft, Apple, Tesla. That's about it, right? And like, how much upside can you actually get, and how dependent are you on macroeconomic trends versus buying into Yellow Pepe, which we know is like the gold star of investments right now. So
yeah, I guess in the short term, whilst the crypto bull market resumes, it's going to give the most sort of upside potential. But at the same time, once the music stops with crypto, I think there's probably still potential for like some not insignificant gains. And again, like I feel one of the biggest psyops of crypto has been to basically ignore stocks. But if you look at the performance of stocks from like the lows of 22, some big names have like outperformed most of crypto. And so Robinhood has done phenomenally well.
Yeah.
Palantir, Nvidia, obviously. And these are like big cap names. And obviously, I'm not saying we can get those kind of returns again because we're also later into the cycle there. But yeah, I don't know. I feel crypto is generally cyclical. And so if we do have a sort of down period for a couple of years,
to have cycled,
what else is going to sort of do well next, or at least do less bad than crypto in a bear market?
Oh, sorry, go ahead, Tom.
No, just like if you had to pick one asset, right, that you had to hold for the next 50 years, let's just, Justin, what would that asset be?
I hate to say that because I feel like I'm betraying everything I stand for, but I would hold the NASDAQ or the S&P 500 basically, because I still think that in the next 50 years, I don't know how the US itself is going to perform relative to, and how the world might change, because I think even in 5 years, the world will probably be very different from what we know it as today. But if I wanted something like a steady, in 50 years, I will get my money back and so on, I would bet on an index that tracks the 500 biggest company in the American culture, basically, because I still think they're the best at business and has highest military and track record and currency and blah, blah, blah. Bitcoin, of course, if we're talking about a cryptocurrency topic. But the thing is, in crypto, I feel like there's so many things that might happen in the next 50 years, whether that's like quantum computers or regulations or traceability or off-ramp, positions, or maybe Bitcoins that I'd be holding that would be tainted and so on, that I wouldn't feel 100% safe. That's it, basically, yeah.
Yeah, I'm not confident in Bitcoin 50 years, given the rise.
But the things I think the things I will hold them for 50 years, but I don't like, if I couldn't touch them for the next 50 years, then I would feel nervous, basically. That's all. But yeah. So what would you pick, Satiris?
Probably NASDAQ. I think things are going to be more tech enabled in the future, and the thing is, with US companies, they're like quote unquote US companies, but they're really global companies. And so
yes,
the Google, the Microsoft, the Amazon, they serve the vast majority of the world. And so I think as long as you're betting on the advancement of the human species, then I think that's the place to be. But again, you could argue, I don't know, declining birth rates in the next 50 years, we're going to see sort of like global deflation. I don't think we will, but there is a tail risk there. But I think that far out, nothing's going to really matter, and we'll be nearly dead if AI hasn't reversed aging.
So funny enough, right? 50 years is sort of happens also to be the period that sort of any S&P 5 company remains in the index. That's, on average, and there have been very, very few outliers. But ultimately, yes. So to essentially say, well, I'll be holding Google for 50 years, that's statistically speaking, that would be outsized risk. And I think generally, yeah, there's probably nothing wrong with holding an index. Although I think one of the biggest risks that I'm seeing is, and we've seen a lot of transactions as well. We've seen OpenAI buying which was really interesting economics, buying a 10% stake in AMD. Right, so I feel at this point this is turning into almost a resource fight, right? So this is still resources around like really talent, right? That's what this is, and it's about access to that talent. But ultimately, at some point, this is going to go into precious metals, right? This is going to go into rare earths. This is going to go into a lot of sort of more transactional things that are required. Lithium is going to be really, really important over the next 50 years, right? So we see semis have been so popular, and I don't see that changing. But ultimately, I think one of my biggest concerns is rather inflation. And I think at the San Francisco airport, I thought this was really interesting that there was a robot barista, right? So now it was too late to sort of have a coffee at the time. But ultimately, I thought that was really interesting, and should have actually double checked how expensive a coffee is at the airport, because it's probably not just $7, but it's probably closer to like 10 or 12. So arguably, you can still see that labor is expensive, right? And you can argue that that's going to get better, but ultimately, I think in the long run, you'll be replacing personnel costs with capex, which is depreciation of equipment, right? Because it's right. Going to be you obviously you need to run the robot, you need to maintain them, and you need to more importantly purchase them. You need the liquidity to sort of buy them upfront, and that's one area where. And I do like to play this sort of mental exercise sometimes. And yes, S&P is sort of the most, or Nasdaq, right? I think if we're but although 50 years is probably a bit long for Nasdaq, but I think at this point, unless something changes, and obviously in 50 years is a long time for things to change, but I think I would be surprised if Bitcoin wouldn't outperform, because I would look at it as so I'll pick Bitcoin. And I think ultimately I would look at this as something that is essentially a hedge to anything that can go wrong in 50 years, and is a hedge against inflation. And I think, again, obviously, and I'd love to, know this answer, although I think 50 years, I'm not even sure if we'll be still around. But I think I'd be surprised if I didn't come out on top with this bet, because ultimately this is one of the biggest risks. I think the economy is going to be a lot more inflationary. And everything is going to be inflation with monetary policy. Plus, that is a huge Black Hawk or Black Swan event sort of lingering. Is what if at some point the modern monetary policy event goes south, and at that point, you're having a really, really rough time, even with the S&P. So I think from that perspective, it will be, but it's still interesting discussion, I think. But I'll stick to Bitcoin.
One point on that though. I'm not sure, given monetary policy, obviously that's like by design sort of inflationary. However, I think AI has the potential to cause quite a lot of deflationary pressure as well, because
I think that's true, yeah.
As you get increased automation, all of the inputs are also trending towards zero, and so the cost of energy will ultimately be trending down as we get more and more sort of like renewable sources of energy, or more efficient ways to harvest and things like that. And then you have AI-enabled advancements in production and things like that, which ultimately are probably going to be driving the cost down of things, which is inherently deflationary. And so I'm not sure if it's as much of a certainty just to be like, oh, the way countries work currently is that they need to sort of like print themselves to infinity to kind of stay afloat, because maybe AI-enabled hypergrowth will actually provide such abundance that governments won't actually need to inflate their way out of it. And I should really look into this, but like the Norway Sovereign Wealth Fund, for example, what's Norway's monetary policy there? It's like, are they also having to be very inflationary, or are they running at like such a surplus that they don't need to be? And might that sort of eventually happen to the US or some of the other bigger players?
I think there were talks, by the way, of the US having its own sovereign wealth fund, or at least they talked about it in the All In podcast. But I think that might just be a pipe dream, but something that would be
Also,
interesting.
helps them have a surplus of funds and not insane
100%.
national debt. But
Yeah. Well, because I feel like sometimes people use Norway as an example for how a country, can be successful in that respect. But I think it's always like a very different, ecosystem. It's a bit like saying, Dubai or Hong Kong, run at a surplus. And it's like, yeah, okay, but it's a very weird country as well, right? Where it's essentially a city centered around financial services without a real economy of commodities or infrastructure. And so it's like, I just want to play my own devil's advocate and be like, yes, I think there's probably a lot of things we could learn from those places. And for example, I think having a sovereign wealth fund makes so much sense. And then on the flip side, I'm like, it's also a very different place with much fewer, a much smaller population, way more resources than they can actually use. And so they get to export so much and so blah, 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 right? So that's the argument.
Analogy, like if AI brings about that level of wealth,
totally,
that would be something to compare the
100%
US to, apparently, like potentially.
And I totally agree with you with regards to the impact AI could have on like inflation, deflation, debate where, Tom, I hear you with the barista, and the fact that the coffee is probably not that much cheaper, even though it's a robot. But I think there's probably also a cost to launching something that new in a venue such as an airport and blah, blah, blah. Versus if you look at
this point.
You're right. Versus, no, but the one example I wanted to give in terms of automation that reduces cost is the Tesla robotaxi, which I know is just like maybe a few units in the entire United States, so not something that we can really use to extrapolate. But chances are, if all Tesla cars could become robotaxi, the cost of a ride, for example, would shrink massively because you just don't have the driver, right? And so I don't know. I think we're going to be surprised by the number of examples where AI, automation, robotics are going to cut costs like crazy, basically.
I think, and look, I think that's very, very logical. The one thing that I will say, and this is more of a contrarian take to this, is that if you look at the number of goods that have actually gotten cheaper through automation, there's far and few of them. I think the best example is TVs. Right, and even that sort of experiment. Let's sort of think. Let's think it through. Right. Let's look at what Tesla would be doing. Obviously, initially, in order to get a lot of the business, you would see you would see that transportation to be very, very cheap. But I think over the long run, it's still a very capitalist economy. So I think ultimately this is still going to be inflationary. It is going to drive, because if you think about it in a way, is what's going to happen. So there's a lot of demands for vehicles at the moment, right? So that's going to drop. So ultimately, to run a business, and assuming that it's, we've got the perfect autonomous vehicles around and we don't need to drive anymore, what's the reason for anybody to be driving except, as a hobby and for the fun of it? I'm pretty sure that's going to be what we'll be looking at. But ultimately, to run that business for Tesla would mean ultimately they own all these vehicles, right? So they need funding, they need a lot of cash flow, and I think if this were to pan out, and it is going to pan out eventually, I think this is still going to be inflationary. They'll be running well, not necessarily a monopole, but it will be an oligopole, right? So there's going to be a few companies that will participate in this. But even if, an example, if you look at the likes of Uber, Lyft, initially they were much, much cheaper than taxis, right? And they still are cheaper, but the cheapness is a lot more marginal than it was simply because at some point you change behavior.
Yeah.
And again, obviously time will tell, but just to play devil's advocate, I would be surprised if things wouldn't become more inflationary, because that the deflationary aspect, or that theory, also assumes that it is going to be a lot easier or goods are going to be easier and cheaper to manufacture. But there's certainly, especially when it comes to manufacturing, there is a lot of things that aren't as simple, and that's where automation is ultimately going to fail, or it's going to be far more expensive to sort of implement. And that's something that we've seen over the past 50 years, especially because we've made such progress, right? I mean, it's just incredible. The quality of life has improved, the degree of automation has improved massively, but we've not necessarily seen that deflationary effect, right? Things have not gotten cheaper because we are in a very capitalist world, and so I wouldn't subscribe to that just yet, but I'd love to see it pan out.
Oh yeah, just one.
I think a very interesting concept. Oh, you go, Satir.
No, sorry. You. I think there was an issue with your internet. Maybe.
Go ahead.
Can you hear Justin?
I think there are issues with my internet.
Yeah, I think Satir, why don't you take it?
No, just one thing, sort of piggybacking off what you were just saying as well, Thomas. I do think also, just as a general point within the whole AI conversation, is not assuming the current level of innovation and output is going to remain the same. And so if we snapped our fingers and suddenly we had ASI, automation, and full-scale production, I think that would drive the costs of like current technologies and production down. Similar to like the cost of a TV of the same spec gets cheaper each year. But the thing is, newer and better TVs are also being created. And so I think factoring in AI is going to not just enable us to produce what we currently have, but also allow us to invent new things and more complex things and things that require a lot more input and innovation and overheads. Then I think that will probably lead still to more an inflationary environment, because we will still be getting new and frontier technologies that are ultimately probably costly to produce and develop. And so I think it's just like an interesting topic. I'm not trying to base my investing thesis on the deflationary pressures over the next 50 years, but I think it's important to try and understand a little bit more just like the mental frameworks of how sort of economies and market demands do work, and how things like AI and automation could disrupt things. And one like self-bias I have noticed myself falling in the trap of is already pricing in AI as this sort of like solved problem where, obviously we're going to get AI automation. Like, obviously we're going to get all of these AI breakthroughs. But the reality is we're still a long way away from a lot of sort of like true promised AI led changes, where right now we're starting to see the start of that, which I think is like super important and super exciting. And you're seeing sort of AI driven efficiencies and sort of like energy optimization, internal sort of controls of how businesses run and operate, co-designing. We're seeing breakthroughs in biotech and the medical fields, but when we've not seen the sort of true step change yet. And I'm not sure if the current sort of RL and LLM based models are going to get us there, or if we're actually going to kind of be investing as if ASI has already happened and we're just 2 years away from living in this sci-fi future. Because I think the realities are people are already probably overestimating what can be done with AI in the short term, even though over the next 10, 20, 30 years, it's probably pretty clear the direction we're going. And so even just from my own sort of investments and what I'm looking at, I also need to try and remind myself that the sort of AGI, ASI breakthrough is not here yet. And what happens if it doesn't arrive in the next 2 or 3 years? Are people going to still be as hungry and risk on for all these like frontier technologies, or are people going to suddenly sort of realize, oh, actually true AI is maybe a little bit further out than we imagined, and now we've massively overspent and we need to cool off for a bit. Justin as well, I think you're back now, so I'm not sure.
Yeah, I don't know. I think because I'm streaming to so many different platforms from my little MacBook Air. Maybe it's not processing things, or maybe it's just the internet. Yeah. No, but I think everything you said, Sotiris, was totally on point. So at least I was listening. The one argument I was trying to kind of chime in right at the end of Sotiris's point, about the fact that prices keep on going up, even though there's automation, is I think you also have to take into account the quality of the product itself along with the price. So if an iPhone is $1,000 for the past 10 years, the amount of compute and features and capability you're getting in that iPhone now versus 10 years ago, it is probably 10x and way higher than the inflation rate, over that same period. So I do think we're still getting maybe potentially more value for the money, at least when it comes to tech and software, and potentially AI, although it might be too soon to tell, not necessarily in the medical sector or the education center, which, of course, are regulated to death. And so that's an issue in its own right for libertarians such as myself. But the point is, I think tech is still deflationary, I think is the right way to put it. If you look at the amount of value you're getting relative to the amount of US dollar that it costs you, that's all. But,
no, that's fair. Yeah.
That's all.
If all else fails, we can just buy Dogecoin and hold that for the next 50 years.
Exactly.
One of us is, and maybe I should do too. So, I mean, I'm holding, but I'm not accumulating, let's say. Guys, just thinking about my internet connection and maybe the fact that we've been, I think, talking for an hour and a half. Is there anything you guys want to shill as we typically do at the end of the call? Is there anything you guys are excited about, or even something non-crypto related? Feel free to chime in, Sotiris.
I think we had most of the shilling more
at the beginning
this time, which I think was good. But stuff I'm basically looking at for the time being is XLP, Aster, Pump, maybe a bit of ENA, Cake for BNB plays. I'm also in a few BNB meme coins right now, but I won't be holding those positions very long, probably. I touched on cards as well. I think that could just be like an interesting like long tail thing if the Pokemon meta sort of regains some traction. Last call, I was talking about streamer meta. That seemed like a flash in the pan, which took me off guard slightly because I felt that was like one of the most perfect setups for a sort of like symbiotic relationship of like, well, if you onboard all of these streamers to shill crypto and they benefit from it, it's like the perfect attention flywheel. That seemed to fall off pretty quickly. I'm not sure if that's fully dead, but the streamer meta is one I'm going to be sort of like keeping a bit more of an eye on. And then also very recently, there's a new meta. I've not actually said it out loud. Feutocracy, starting with like MetaDAO and things like this, where you have sort of more DAO-based control of ICOs. So I actually just participated in an ICO yesterday on MetaDAO. It was very just sort of spur of the moment, and it's like 1,000% oversubscribed, but essentially the team only gets issued tokens once they hit certain like market cap thresholds, and so it kind of incentivizes the team to keep pushing the project before they get their unlocks. And then I believe all of the funds raised are then put in a DAO-based voting structure, so the investors themselves have say on how the funds are allocated and appropriated by the team. So I think this is kind of trying to provide a little bit more accountability for projects and ICOs. And so again, it could be just a flash in the pan type thing, but this is like another sort of meta from the trenches that I've seen brewing.
Nice. Tom, I have some ideas, but feel free to share if you have anything in mind.
Yeah, I'll keep it, short and sweet. We touched on, I think Bitcoin miners are, or miners in general, are looking for a nice setup, and other than that, we'll probably see on the sort of high market cap side, the crypto blue chips, if you will, we'll probably see a lot of movement, and just don't overthink it. I think that's any exposure to those, I think will definitely be really good this October, and probably also November and December, and that's really it. I think exposure is the key, is key, and it's just a matter of how levered you want it. Plus, I do think that Robinhood is still off in terms of the degree to which they innovate. They are riding a wave at the moment. So Robinhood, Bitcoin miners, and other than anything that's sort of blue chip crypto with the occasional meme coin, even if that's lower cap, for as long as it's sort of within a diversified portfolio, should do really well.
Nice, super cool.
Justin, what do you think?
On my side, an unusual shill, but it's because I've had a very interesting conversation with a VC while at Token 2049. And so we were talking about the Lighter exchange. So the name of the exchange being Lighter, and the fact that the points are trading at a really attractive price. So if anybody was smart enough, and again, one of those stories where one of my super good friends in Hong Kong was like, oh, you should be trading and accumulating points, and you've got a good APR on the pools and blah, blah, blah. And I didn't do it. But for people who do have points, they seem to be trading at a very attractive price off market, even right now. And there's rumors about TGE, so there's some money to be made there. Now, of course, that boat is probably missed considering that TGE is relatively close. But then the VC guy was telling me you should check out Pacifica, which is on Solana, essentially an equivalent of Lighter or Hyperliquid or whatever on Solana. And I was like, okay, but just new DEX, whatever, And then I look at the volume, 1 billion, like 1 billion plus, of volume, which, having worked at an exchange back in, 2018, 2019, I was like, even getting to 10 million or 100 million is an achievement in its own right. So if you've got real volume, real on, between brackets or between quotes, even if you have like 1 billion plus of volume on a new exchange that presumably nobody else knows about on Solana, and you can earn points on there. Unfortunately, I'm not a trader, but I wish I was, because I would be on there accumulating points and waiting for some kind of TGE later this year, early 2026, whenever. I have no insights on that front, but yeah, that's it.
Nice. I'm here as well, and I'm kicking myself. I had the easiest opportunity to earn like 10,000 Lighter points like the first week by just using my friend's referral code and trading like 1 million or something, and kicking myself for that one. But he's got 60,000 points, so he's going to get a very nice and he's a young guy. He's like 23, so I'm pretty happy for him.
I had a friend who's not associated with the exchange, so he's just he's really active in that ecosystem. And it was like, oh, I think the points are going to be worth like $100 or something like that. So I'm like, if you've got 60,000 points and it's $100, yeah, I mean, it's a good time, basically.
Yeah, it's good for him.
Nice.
Anyway,
on that note of missing out, let's get back in the trenches.
Exactly.
All right, guys.
Guys, let's close it here. But it was a very cool call, and I like the way we started it, and I like the way we finished it, and I liked everything in between. So all good.
Perfect. All right.
Yes.
See you later, guys.
Take care, guys. Take care.